Which stock is it that has a compound annual growth rate of 75,372.3 year to date? Which stock is that? It is, look at that, Nextier Oilfield Solutions, up 10.65% today, the 11th of February 2022. And over the last three trading sessions, that is last 30 trading sessions from we're talking about practically this whole year 2022, the stock has been on a bullish push. Look at that. This is where it closed on the 31st of December 2021, $3.54, and since that time it has more than doubled now. It's more than doubled, going by what it is trading at right now. So out of those 30 trading sessions, it has only closed below its 10-day moving average 3 times. Below its 10-day moving average 3 times. Not any, but somewhat close to its 20-day moving average. This is the daily chart. This is the 1-year chart of the stock. It's also the daily chart. The stock has just it actually on some sessions it does close lower, but it further, once that happens, it becomes an impetus to even go higher. You can see that it does correct. You can see that 1, 2, and then we have these 3 here. That is this, okay, 2, 3, 4, 5, 6, 7. So 7 times it has closed lower than it opened. But even at that, it feeds on, becomes an impetus. It becomes a need to even push it higher. I think this is probably the best performing low small cap stock. I think probably the best performing stock so far in this year. Probably the best. And this is also a time where we are seeing that the S&P 500 has now fallen below its 200-day moving average on its daily chart, and also below its 40-week moving average on its weekly chart. All broadly speaking, the market has just corrected pretty much, but this stock has done the opposite. And let me show you again. It has a beta of 3% of 3. This should normally indicate that if the market is collapsing, this stock should even do by far collapse even way more. You can see that its correlation is 3 times. That means if the market is doing badly, it should do badly 3 times. If the market is doing well, it should do well 3 times. But the reverse is the case. So maybe this figure has to be reevaluated. Because we could see clearly it is not correlating at all. 7.77. That's where it closed. This is probably exactly 100% from the close of the 31st of December 2021. Strongly bullish. Totally strongly bullish. And let's see whether we can find a few things that have been said about the stock. This is from Simply Wall Street. Okay, and it's saying here, Nextier Oilfield Solutions isn't currently profitable, so most analysts would look to revenue growth to get an idea of how fast the underlying business is growing. Generally speaking, companies without profits are expected to grow revenue every year and at a good clip. Some companies are willing to postpone profitability to grow revenue faster, but in that case, one does not expect good top-line growth. In the last year, Nextier Oilfield Solutions saw its revenue shrink by 26%. The stock is up 83% in that time. A fine performance given the revenue drop. To us, that means that there isn't a lot of correlation between the past revenue performance and the share price, but a closer look at analyst forecasts and the bottom line may well explain a lot. Okay, so yes, that's what they have to say there. And let's see whether there's any short interest concerning the stock. What the short interest is like NEX. Okay, it's 2% of the entire float has decreased further. So with this rally we are seeing now, it has been pushing. It definitely has resulted in some short covering. So what we can say, you can see the short interest has decreased by 30%. So it is fair to say that the rally we have been seeing is also attributable to some short covering as well. So it is down 1.3% in this after hours of the 11th of February. Okay, so let's see whether we can estimate a target for this stock. Okay, let's take this price of 649 and this low of 6.3. So this is 6.49, yes, and 6.3. So that will give us a difference of 0.19 times our choice is 2.618. You can always use 3.618 or 1.618 or 1 or 0.768 as the case may be. These are Fibonacci extension and retracement levels, so you decide which one it's going to be. So we're just using 2.618 and we will multiply that by that difference in prices, the high and the low prices. That gave us 0.19, so multiplying that will give us 0.49742 plus the closing price. We're going to use the closing price of 7.70 plus 7.70 is 8.19. That's our target. 8.19 is our target for NEX stock. Would it get there? I think it's possible, but never say never. Never say it might suddenly not get there, but our target is 8.19. Okay, so this is, I believe, by far probably easily the best performing stock so far this year. This is coming at a time when the S&P 500 has now fallen below its 200-day moving average on the daily chart, and its 40-week moving average on its weekly chart, which makes it quite likely that it would retrace further down to possibly 4.059. This is coming at the time that the stock is doing the reverse, and indeed it is oil related. So you might want to say that maybe it's driven because of the rising price in oil. So yeah, that could be the case, but it's smashing it and extending. And as we pointed out earlier on in this at the beginning of this video, it has a compound annual growth rate of, let's look at it again, 75,372.3. yeah, that's what it has. Okay, so our target is $8.1972 for NEX stock, next tier oil field solutions. So see what you make of it. Be really careful. I'm not suggesting that you buy it. I'm just pointing out what has happened with the stock. We have been able to determine the target. We didn't estimate any supports, but we're just leaving it at that. We'll continue to update you as regards the stock. Okay, so thank you very much for watching this video.